with the banking incumbents, organisations have an opportunity to tap into a more agile, advanced and innovative payments landscape. Smart organisations are utilising the potential for deep API integrations and preparing by bringing payments in as core and driving customer experiences to surprise and delight. We all remember what it's like to have a bad customer experience, but gee, it also feels great when it's a really, really good one. So, seamless end-to-end customer experiences thanks to greater freedom to share consumer data. The question is, will they make and break brands in this new world around open banking, CDR, a range of experiences? And how do we, as FinTech, leverage this as a growth pathway? Well, as I mentioned earlier, the GoCardless team is here. They'll introduce themselves, I'm sure, but please put your hands together to welcome them. And Carolyn Breeze, our moderator. Thank you.
This is going to be a little awkward. I know we've been talking about how sexy FinTech is. I don't normally sound like this. I got really excited about being here at the event and meeting all my friends, and in my awkwardness in the lead up to this day, lost my voice. So you'll have to bear with me. Second awkward piece is that actually wasn't our intro. I don't know who's up on after us. Potentially they're talking about customer service, but we are definitely not talking about customer service or open banking. But the intros were right. So I am Carolyn Breeze, the General Manager of GoCardless here in Australia and New Zealand. I've been with GC now for almost 2 years, leading the international expansion into this region. And what we thought we'd do today, considering the rest of the context of the conference that we're in, is talk about maybe the one thing that combines all of us, which is growth. So we know that we can grow a business either by creating new products and selling those into our existing base. We can grow by increasing the size of our total addressable market, or we can increase our business by growing into new emerging markets. And that's the decision GoCardless made when they went global some years ago. So what I thought I'd do is actually torture my team, because no one gets to see them very often, and they're really the brains and the arms and the legs that are doing all the work that I get all the credit for. So I'll let them introduce themselves, and then we can harass them for 30 minutes. Luke.
Hi guys, my name is Luke. I head up the sales team at GoCardless in Australia and New Zealand. GoCardless is the second FinTech that I've worked for where I've been a part of the early stage growth team or sales team that's helped expand an international FinTech into the region. So GoCardless now, and I've been here for the last couple of years, and then before that Braintree just prior to the acquisition by PayPal.
Yeah, hi guys, my name's Joe Robbins. I've been with GoCardless for coming up to 6 years now, so longer than I ever thought I'd be selling direct debit. My roles have varied quite a bit, so I came out to Australia in 2018 when we launched as the country manager, and my expertise is really around land and expand of new products or new territories, but also building and fostering culture within those scale-ups.
Hi everyone, I'm Tanya. I've been with GoCardless for just over a year, and I look after partnerships for Australia and New Zealand. And that remit includes looking after the local part of our global partnerships, and they're with the likes of Xero, Zora, Salesforce, and then also managing existing partners on the ground here locally, as well as finding some new ones.
Thanks, guys. So, Joe, I often get asked by fintechs in Australia who are looking to expand. Sorry, this is where I told you it would get really awkward. How they decide where to expand overseas first and what kind of due diligence they do. Considering you were first on the ground, can you share some of your experience?
Yeah, the amount I want to say, pardon, can you repeat the question, is high, but I won't. So I think before we talk about GoCardless in Australia, it's probably worth talking about the overall GoCardless journey internationally. So we launched in 2011 with the view of being a global recurring payments network for the internet. So when I joined in 2015, we'd already started that journey by moving into France. And soon after that, we moved into Germany and Spain and the Nordics. So Australia wasn't the first growth path for us. But having said that, it gave us the ability to learn from the mistakes we'd made in Europe when we came out here. So we made the decision to really put a conscious effort into the way we launch and do the due diligence. So that started with something called the FinTech Bridge, which is a government initiative where you bring UK companies out to Australia and really show them co-working spaces, you introduce them to VCs if they need it. And that gave us an insight into, I guess, the bare bones or foundations of launching out here. From there, I was lucky enough to come out here for 3 months. So I lived in Sydney, and we had a set of hypotheses that we had to prove or disprove that gave us an insight into whether we should launch. So it wasn't we're launching in Australia and New Zealand, how do we do it? It was, should we even do that launch? So that was a really important 3-month journey that we went through, and obviously came back.
What were some of those things?
They really varied. So some of them were more product-based. So things like, is the value that we're seeing in the UK still relevant out here? So do people care about the same things? So we knew that people cared about automation. We knew that people cared about cash flow. But that was very UK-centric. So we had to meet as many people as we could to prove or disprove that. Second one was probably more around pricing. So we had what we thought was a really good price in the UK, but how does that resonate out here, and how does the competitive landscape affect that pricing? And then the third big one was more around support. So what are people's expectations? We heard a lot of US companies coming over here and really underbaking their support and then dying within 12 to 18 months. So it was really important that we knew the breadth of support that people expected, but also the need to have people on the ground, or whether that could be managed centrally from the UK. So they were the kind of questions or hypotheses that we had to prove or disprove.
So once GC had worked out that we were a fit, oh God, this is not working. What were the first steps you took in establishing the office here?
There were a few things. I went back and presented to the management team in the July, and then we launched in September. So it was a pretty quick turnaround. I actually suggested that we launch in Sydney, and then the business asked one of our biggest partners, who are sitting in the front row, where we should launch. They said Melbourne, and I got completely overridden with my my suggestion. So we launched in Melbourne in the September. And then it was just really a case of getting the kind of key milestones of those first 6 months. So we didn't care about the numbers of customers or the revenue. We cared more about focusing on a small number of things and doing those things really well. So that meant getting our first customer on board, getting our first advocate on board. I think it's easy to get customers, but people forget that an advocate, someone that really cares what you do and believes it, is more difficult and gives you a better gauge that you've got something. So that was a really important thing to us. But then also, we had to keep feeding back because this was new. Like, we were so far away from the UK, you couldn't just have someone jump on a Eurostar and come out. It was, everything was breaking because we were learning about it for the first time. And you can only do so much secondary research, and you kind of got to live and breathe it. So they were kind of the real key things for us, was getting those milestones, aligning people in the UK, so heads of marketing and support and product who didn't have a Australian lens to their role, to really kind of buy in and know what we needed from them in order to launch.
So, Luke, then with very finite resource, how do you decide where to play?
The one thing that we definitely did, and this is the second time that I've done that, is understand from the business's point of view what the expectations were around growth, and then how to go about achieving that. Because we have a platform that serves both a window cleaner at the smallest end of town, all the way through to the largest enterprises in the region, we needed to understand, was it going to be all placed on growing short-term revenue through small business? Was it about going after the big whales, but understanding that that process could take years without any income? Which is what we decided to do, which is primarily through our partners, is trying to execute SMB, corporate, and enterprise. And for that, we needed to make sure that we had the product right, we had buy-in from areas of the business where we knew the questions were going to come, and we also needed to make sure that we had the right people and the right team to support that growth, because it's, you have to be really clear when you're starting to hire a sales team that they believe in the platform and the strategy as much as you do. Because being a new brand on the ground, no one knows who you are. So it's all well and good hiring someone that can sell a great product, but you need to sell the story, and you need to sell our brand, and you need to sell our culture, which is why I believe we have been successful in our first almost 3 years here, because we've got that mix right.
Joe, you're involved heavily in our hiring process. Can you talk a little bit about culture?
Yeah, sure. So I think culture is something that we take very seriously, and we have a lot of pride in what we do. So when we went through the process of our first hires, there was obviously a different lens to the type of person or the makeup of person that we were hiring. So we needed to make sure that they really were the face of GoCardless, because by default, there wasn't anyone else to do that. So in the UK, where you would want to hire 10 salespeople in a short period of time, it was a much more selective process for us around that culture side. And we probably put that number one. Not that we don't now, but I think it was so important because you've got to have the trust that these people can go out and represent you in different events or in front of customers or can deal with that uncertainty. So that was super important. And I think the second thing for us was hiring people that were flexible enough to move and adapt and evolve in that role. I defy any company that's launching a new product or launching globally to follow the exact path that they mapped out. So we needed to have people who could, as Luke said, sell to enterprise 1 minute, but if we needed to pivot and start selling more in terms of high volume, they could do that as well. And it's a kind of rare breed, and some people don't love it, but you kind of have to go through that process in order to get the right people on board.
Thanks. Partnerships have been critical to our growth. Can you share some of the things that you look for in a partner and share some of the insights into the growth that we've had?
Yeah, sure. I'm going to answer this in the context of one of our longest and strongest global partnerships, which is with our friends at Xero. And the strength of that partnership was such that we were able to leverage that to actually launch in Australia and New Zealand. So that go-to-market model gave us a real ability to build up a base of merchants and advocates while we built out the broader sales and partnership strategy. So that was great, but what's even greater now is we've further advanced that partnership so that we are now embedded in the Xero product. And what that means is the Xero user in the Xero environment is presented with GoCardless at the point of their journey that makes sense for them to be taking payments. So that, to us, is really the pinnacle of what a partnership should be. And the reason it works so well is because of the mutual benefit that we drive to that end user. So to them, the benefit of using us with Xero is stronger than it would be using either of us independently. And that's really what we look for when we're looking for new partners is, gaining a true understanding of what any potential new partner's product looks to solve and how can we add value to that.
I think we've also become by default, because we are on the ground here, there's a number of industries where partners of ours that are strong in the UK or the US or Europe are asking questions of us and helping us with their go-to-market strategy. So, in the current climate, they can't jump on a plane and come and work out what office to lease or, what the culture's like of how business gets done in our country compared to others. So it's been great to be able to provide that advice to other businesses and other partners that have wanted to come into the region, whether they be specifically trying to target one customer or they're trying to target 1,000. It's been nice to be able to be and have an experience where we can coach them through that.
What are your top 3 learnings around partners?
Around partners, yeah. I think my first one is the importance and the effectiveness of using technology to communicate. And that probably sounds like I'm a bit slow if I only just realised that. But COVID took away, any other ability to communicate, to meet in person. So we've had to rely entirely on digital communications. And because I started with GoCardless in March 2020, just as everything shut down, I had that moment of how am I going to build these partnerships and these relationships when I can't go and meet anyone face to face. And so what I learned through that period is that it is totally possible to do it via Zoom, via the phone. There is always a place for face-to-face meetings, and as the world kind of opens up again and we go back to normal, we're absolutely going to embrace that. But the learning for me is not to delay a meeting until, I'm in Sydney in a month's time or New Zealand in 2 months' time to do it face-to-face. Keep the momentum going using the tools that we have at our hand in the meantime. I think the second one is if you're a business who already has some established partnerships, or you're a new one who's looking to establish some partnerships, you probably have an idea of where you sit and who your ideal partners are. So in our case, our traditional partners are invoicing platforms and subscription management platforms. Is to keep an eye on what's happening around you and make sure you consider new forms of partners as well. So a big one for us now is neobanks, and how we can work with them to provide direct debit services to their customers. So a great example where we've done this in the UK is with Tide, who is a neobank for SMBs, and they have chosen us as their partner to provide direct debit services to their millions of small and medium businesses, which is a great outcome for both of us. But what's really cool as well is as new technology becomes available to us, and we've just launched our instant bank pay product in the UK, Tide's customers get access to that as soon as we launch it, without Tide having to dedicate resources to developing that functionality themselves. So things like that we really look forward to bringing here, as the rails become available. And then my third one is being flexible. So don't just have one partnership model and try and shoehorn everyone into that same format, because it doesn't work. Understand different businesses have different motivations, different KPIs, and different things they want out of partnerships, and being willing to work around that.
Oh, this is so hard. I'm going to give it another couple of goes. So 75% of our base in Australia is actually merchants that have come from our partnerships. And that growth allowed us to focus our resource on building the direct sales engine that Luke leads. And we often get asked, what is the secret sauce to building a sales engine across multiple verticals? So from SMB right through to enterprise. Can you share some of the build phase that you went through?
Sure thing. So the two fintechs that I've worked for have operated very differently. So I think the first thing that I had to do, and Carolyn was dragging me by the scruff of the neck around London in my first week, trying to get me to meet all of the people that were really important to understanding how to implement our strategy when we got home. So it was really important for me to understand how the business operated today, how some of the other growth markets that Joe had led before went about business, the things that they did really well, the things that didn't go so well, and then overlaying that with our local conditions. So that was really important, and an eye-opening experience for me. When I got home, I think I needed to flip that around and, like I said before, really be able to clearly articulate the value of what our business brought to the individual. When you're hiring a sales team, every salesperson wants to know at that moment what the next step looks like, and what the timing of that looks like. So we needed to be really transparent that we're a growing business, but also a results-driven business. So from a culture point of view, we've been able to get people on as a part of the team that, like I said earlier, are prepared to do the hard yards to sell a brand that people aren't aware of yet, that were willing to be adaptable so they could shift, whether that be shifting between vertical specialisation, shifting between segments, and being in an environment where we took away their strongest asset, which is getting in front of people, taking them out for a coffee, and really getting to know them as people as a part of the sales process. So I think that was really important. And then, as Joe said, what I'm really proud of about the way that we've gone about it is that we've brought on customers that have, in almost all cases, turned into advocates. And as a part of our agreements, in some cases we have to ask for the ability to use their logo or their ability to do some PR with us when they execute. But in a lot of cases, because we've been able to build that relationship with them, no matter how big a brand or how protective they are, they've been open to partnering with us to help us because of the investment that we've made into their business. So I think that partnership is a really important part of our growth and something that we're not going to lose as we get bigger. I think the last thing is when we were new here, the number one thing that we needed was to speak to more people, to call more people, to get in a room with more people. So I think the one learning that I've had is I probably, if I had my time again, would put more resource into growing our pipeline through our team of SDRs. So we're at the beginning, we had 1 SDR to 4 account execs. I would have flipped that around, and I would have definitely focused more energy on growing the number of opportunities for the account execs so that we could build the funnel earlier, have better coverage, and do all the things that we wanted to do. But luckily, we did okay. So more so, one of those dream things that if you had your time in a time machine, you'd go back and fix.
What would either of you do differently if you could go back in time?
I think one of the things for me, sometimes you get lost with the amount of information you've got. So Luke talked there about having the foresight of seeing how other regions launched or how other products launched. But in some ways that can actually cripple you because you take those as assumptions quite strongly held. And I think I definitely suffered from that when I came out here, being quite bullish about process or about brand. So I think if I had my time again, I would really try and respond to things in more of an open way than I did before. So if things break, that's a learning thing. That's not a reflection of us doing something wrong. That's a reflection of a UK company coming out to Australia for the first time and doing this. So yeah, I think not having that cookie cutter approach and being a bit more open to adapt and evolve is a very vague answer to your question, but it's probably something I would do.
Yeah, mine's pretty similar to that. And back to the point I made earlier around flexibility. It's just having that mindset of being open to doing things differently and not just kind of assuming the way we've been doing things in other markets before is the way that we should always keep doing things here.
Does anyone have any questions for us?
To stop Carolyn from talking anymore.
Hi, Marie Mortimer from loans.com.au. I suppose it's very interesting that you're a UK company that's come out to Australia. What were your challenges from maybe a regulatory point of view and even with access to the payments rails when you first got here, and how did you overcome those challenges?
Sure thing. I think it's an evolving challenge. It's not a once-off challenge. So the great thing for us is Australia is one market that is going through a significant amount of regulatory change, and that was really transparent to us when Joe came out here. So that roadmap was really clear. So part of the execution of the team and the strategy and the resource that we've got back in London is to make sure that we're ready for those changes. So as a part of us landing on the ground here and then also evolving our product to include services like FX is that we had to get AFSL, we had to upgrade our AFSL, and then now we're looking to execute on the roadmap of open banking and then again execute on the availability of Pay 2 through the new payments platform. So lots to do. We've got great collaboration between our teams, and I think that's definitely something that we try and harness when we are in London, is making sure that we're communicating up rather than expecting the UK way to be pushed out here. And we have fortnightly stand-ups with risk and compliance. We have fortnightly stand-ups with products and the regulatory team. So we've got to push in more than what they push down to make sure that they've got the time to plan.
That's how I lost my voice. JR.
Yeah, I do think, to your point, the more variation there is, then the more expensive it's going to get to manage and control. So there is probably a finite number of models you would want to use. I think in each case, though, it would depend on the specific use case and then the return on, the investment into doing that model a little bit differently than the standard model. So I don't have an answer as to kind of what would be the very end point, but I think for us, as we are still building up our ecosystem of partners here, it would very much depend on what is the partner opportunity, what are we bringing to it, what are we getting out of it, and then being able to set the parameters from there.
I think the only thing to add on that is that you often see people tiering their partner relationships based on that value. So where you might not be able to segment across the whole base, you can probably pinpoint your top 5 or your top 10 that are providing the most value, and they're the ones you need to give maybe more of a one-to-one relationship to, versus those that maybe don't have the expectation that you have to be in their office every week or you have to provide them loads of bespoke content. So having that conversation up front, just to understand what the expectation is from both sides, can go a long way into knowing whether you need to devote as much resource as you think you do, because diverting more resource doesn't necessarily equal greater conversion or greater value. So I'll probably just add that to as well.
The potential of a partnership can be really distracting. It's like the shiny new toy, the new addressable market. It's really difficult to build based on an ROI that isn't set in stone. Once you're integrated with a partner, you then have to go sell to that base, or you rely on that partner for the leads. So, it's a tough one, and sometimes I would even take it back a step, and we've made conscious decisions to remove ourselves from a process because we know the shiny big toy, which could be great, is going to derail all this stuff that's happening over here.
The other thing is clearly we're pretty close with, as a team. So sometimes that removing yourself process can be Tanya coming in and us all jumping on a whiteboard, and that's what we've absolutely loved about being all together a majority of the time in the same office. Is it just opens the door to collaboration and taking loads of different pieces of feedback from different ideas, and that whether that's Tanya as a part of a plan for an SDR to target an account versus a meeting we had yesterday where I'd say 80% of our partnership commercial models were all discussed in the one meeting. So yeah, it's a tricky one, but I think being a team and hiring for a team that can work together means that you can take ideas and feedback and find a way that works.
Last question.
Hey, Ben who likes beer here. If you've got learnings that when you came to Australia basically from the UK, I'm going to flip that. Do you have any tips for going to the UK, knowing the differences here now?
It's a very good question.
No, you're not taking Joe. He's not going back.
Damn it.
He's ours.
I think the process remains the same. So I think if you've got a set of hypotheses that you believe out here, you've still got to test those. And the bits that I said before around how you go to market, the level of support, everything like that, it still rings true. The biggest difference from a commercial stance between the UK and Australia is the UK is definitely more formal, and it's definitely more done behind a computer or laptop than it is face-to-face. So when I first came out here, I think one of the first meetings I had, the question that I got back was, are we having a coffee before 11 or a beer after 3? They were the two options. So you would not hear that in the UK. That wouldn't be a thing. It would be, let's jump on a call, let's talk through it. I might bring someone in down the line. So there's definitely more formality there. But ultimately, you're not reinventing the wheel. Like, the stuff that you're seeing here will still resonate. It's not a different language. It's not a completely different culture. It's more about getting those nuances right and tweaking that. But more than happy to have a longer discussion with you if you like.
And there is a FinTech bridge the other way, isn't there?
Yeah, there is. So the FinTech bridge I mentioned before is about UK companies coming out here, but vice versa. If you get in touch with the Department of Trade out here, there's loads of help to support you moving over, and sometimes it's just unlocking some doors for some intros, and that's what goes a really long way. So yeah, utilise that as much as you can.
Thanks, everyone.
Thank you.
Have a good
Thank
day.
you all.
Thank you to Carolyn, to Luke,